Good morning, everybody. It is one day past the election. President-elect Trump meets with Obama today, and the mainstream meme will be how well the Democrats are cooperating with Trump, getting ready to smooth the transition to his government. We know how well that works. But I think what is really interesting from our standpoint, if you remember, coming up in the election, Trump's a catastrophe. Trump's going to do this. Trump's going to do that. He's going to destroy the stock market. Everything is going to go down. The world's going to go into a recession. And we see the stock market soaring. And it started soaring in London after it was clear that after his acceptance speech. And we talked about it a lot yesterday, that if Trump's agenda does get passed, lower taxes, decrease rules and regulations, etc., that's actually good for the economy. So here we have Wall Street, who is all in for Hillary. All the money went that way. Hedge fund managers, the big investment banking firms, the brokerage firms, the 5 major banks, the primary dealers, are all in for Hillary, telling us how bad it's going to be in the market soars. So why would they put something out like that? Well, they were trying to influence the election, just like the mainstream media was, to make sure that the status quo was preserved. So right now we don't have, that's no longer something that they can talk about. So they've, what are they doing? Doing the obvious. They're buying stocks based on Trump's 28 proposals for his new administration and what he's going to do to help the economy. And stocks reflect where they think the market, stock prices reflect where they think fundamentals and economics will be 6 to 9 months from now. So that's where we are. So I think the biggest factor on today's market is going to be the direction of equities. And the Dow probably will be the first one to set new highs. I like the ES better because it's a broader measure. It's harder to manipulate. And so I think the ES and the NASDAQ and all the others will be making new highs if the Dow does. Probably not before the Dow. And it's the direction of the ES that's probably going to take futures down. The feeling right now is that the economy is going to start to grow, or the groundwork will be laid for the economy to grow. And that tax cuts, etc., are forthcoming, that the Fed's influence on the market is going to lessen. Interest rates can get back to the historical norms. I think interest rates getting back to the historical norms is a bit of a push because of what it does to debt service payments. Right now they're about $300 billion. It'd be close to $1 trillion if we go back to our historical interest rates. And that would add another, $600 billion to our deficits. So that's what's really holding the Fed back. Interestingly enough, yesterday that the odds for a December rate increase decreased from the low 80s to 70%. So again, we'll see if that plays out. Right now the market is pointed down. Nothing but B's if the stock market rallies. It should trade up. This morning we had jobless claims at 263 and natural gas at 53 BCF. So after the jobless claims numbers out of the way, the market will come back and focus on the direction of the E-mini. We're in new territory. Haven't been here in a long time. So we're going to just, support's going to be in the 20 area, then 16, then 12, then the buck to 08. I think we are headed lower. We're going to trade lower, so let's make our first buy 9 to 13, and our second buy 1 to 5. A lot of puts were covered yesterday. People came out of them, and they think maybe the end is near. And tomorrow we have a bank holiday, so there'll be some profit taking by major institutions before tomorrow's holiday. all day. And today we also have the 30-year auction, and it's really tough to move paper when the market is moving down. So I think sometime today we're going to see buyers. So we may maybe one more push down, and then we'll start to see some consolidation. Sell 1, 27 to 31. Sell 2, 3 to 7. Actually, let's make it 13 to 17 for the buy. Let's move that up a little bit lower right here, and then we'll make we'll keep 1 to 5 down there in case the market actually does spill. Looking at the 30-year, and again, when we've had heavy-duty selling, I would say quite often Globex will set the low, but I think we might go a little lower here. So we're going to put first support at 12 to 16. We'll make 1 to 5 buy 1, and then 21 to 25 buy 2. I'm on 2-tick increments right here, so we won't be able to cut it with as fine a tooth comb. Last rotate up stopped at 28, so 28 to the buck. Number 1, 3 to 7, sell 1, coming in at the top of value, and then we'll make it 19 to 23 for sell 2. Again, if they're going to move the 30-year paper, and they are fully hedged, I mean they don't have a lot of exposure. They can't really do it with the market headed straight down without a major piece of news, and so today's major piece of news is going to be the direction of the stock market, in my opinion. Okay, gold has recovered. The 75 to 80 is, when I looked at it, looked like pretty good support, and that's where we were yesterday on the close. And we had a low of 74.80, and we're at 81 right now. So we've got lows of 77, 78. We're at 82. So we'll make 78 to 80 buy 1. 75, 77 buy 2. Basically trying to buy 75s to 80s. On the sell side, 85 to 87, and then 90 to 92. Looking at the euro. Now all futures markets will be open tomorrow. The equity markets will be open. The cash bond markets will not, and it also hurts currencies quite a bit too, Fitz. Remember, banks and the forex market is bigger than the futures market in currencies. But without the banks playing, it pretty well kills trading in treasuries, and currencies aren't far behind that. Equities can trade, but they usually get less play too, just because the banks are a huge component of the market. Okay, got buyers below 109, so 90 to 109 even by 1. 875 by 2. On the sell side, 924 sell 1, 950 sell 2. Yeah, usually bank holidays kill the markets. They're fine for scalping. I'll be here, but we're not looking for a lot of action. Okay, crude oil. All the articles are being published out there. If OPEC doesn't get their act together and do something, the $30 crude oil is coming. And so we've got a seller at 46 and we've got a buyer below 43.75. We're at the close to the trading range. We've got a B right now, and the market is selling. So 45.25.50, sell one. 45.75, 46, sell two. On the buy side, we've got a B. So yesterday's low was 44.50. So I think we'll get stops below 44.50. So we'll go 44 1/4, 44.50, buy one. And then 43.75, 44, buy two. Okay, this high volume number, if you don't believe in magic, you can believe in high volume numbers as attractors, right? Take out a low volume number, you should get to the high volume number. Voila, there you have it. Right now, this trading target down here is 59.60. Really no news to speak of, so 60, 62, buy one. This is 1 point increments, so to get it on the screen. Last rotate down yesterday was 48. Then 52, we have the overnight low at 55. So we'll go 50, 52 for buy two. Give it a little bit of room right here. Don't think they'll restart the financial meme that Trump's a disaster, but you don't know. I do think we're headed for higher prices, but 80% of the time, the high or the low for the entire session is set in Globex. So we're at 70, so 79, 81, sell one, get through that, 89, 91, sell two. So stops above 92 if we bust out and take out the Globex high. And on the buy side, you know, it might take us 65, 67 to get in. We're going to play it for the cheap, but at 65, 67 at 4/5 level edge might be where we are. Okay, we'll take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.